Welcome to the video, guys. Havoc Trades. I'm bringing you a video of how I am approaching the markets in 2025, just through my 6 years of experience and where I'm at now. Hopefully you find some things in this video that help you. If you think that you know someone that can also find some value in this video, feel free to share it with a friend. Like and subscribe. I'd appreciate that a lot. Without further ado, let me get right into the video. So something that I think is key for me, and this may sound basic, but the colors of my candles, keeping it all black really keeps me focused on what the chart's actually showing me pattern wise, rather me focusing on whether the candle's closing bullish or bearish. That should never matter, no matter how you trade. Even if you trade differently from how I'm going to present how I trade here, there is no right way to trade. It's just about what makes sense to you, what you can stay consistent with, and what you've learned through your experiences. I'm big on that. I'll never be someone to be like, just because I'm helping you learn how I trade so you can get a better understanding on how you want to trade doesn't mean that you have to trade just like this. So anyway, no matter how you trade, the color of the candle closes should not matter. It all depends on, does the setup make sense? Is your criteria here? And then do you have the proper influences to actually act upon this trade? Those should be the things that you're always thinking about. And granted, you're going to have moments where you're going to slip. You're going to have to make mistakes to realize, this is why these are the things that should be in the forefront of my mind when I'm trading, because it's a business. This isn't a gambling spot where you can just come in and gamble every single day. If that's your mentality, you've already lost. This is a business. You got to treat it seriously. So all black candles, focusing strictly on the patterns. Now, I like to focus on the higher time frame levels and then really work on my entries based off of the smaller time frames, off those higher time frame levels. So right now, looking at structure based on Ethereum, something I'm interested in trading, and I'm actually going to trade it now on a live account. We can see here that price is creating a lower high potentially just on the monthly time frame. Now I could go up to a higher time frame like the 3 months, see that equal highs have been presented, that this higher low point, because equal highs have been presented here, we have a high probability of coming back down to here. And as I'd like to mark it out, I'll come to the wick high, which we see was unfulfilled, so gives me feelings that, it gives me motive that in the future, if we continue on this bearish trend, take out these levels here, high probability that we'll definitely come back up here and properly take out these highs. So, oh, did it delete? Oh my goodness, I think changing the colors deleted all my templates. That's fine, I'll add it back after. Anyway, we'll mark out these levels here. Right, let me just scale down to the monthly. And obviously you see here, these previous highs have not been taken out, but price is in a potential shift to go to the downside. Keyword potential, right? Because if price does not end up treating this area as a lower high point, which I like to draw this out. I'm a very visual person. Price is in the uptrend with the higher high, higher low. We have these many equal highs, and price is coming back down to that previous higher low point, and we did break it. Now, this is the key thing. If price can end up staying under that previous higher low point and treat it as a lower low point, price is going to keep going down based off the higher time frame. About $880 per price for $880 per coin for Ethereum would be my ideal target for the sells. Now, that is not something that would happen overnight. We're looking at the monthly time frame. Higher the time frame, I think the longer that the move is going to take. That's just natural. If you're looking at the year time frame, every candle is a year. Looking at the 4 hour, every candle is a 4 hour. Two drastic lengths of time that your take profits are probably going to hit. Anyway, so if we end up creating this as a lower high, right? The sell scenario. Now, the opposite, which have to be aware of. Price came to this area. If we can end up closing above here, that would mean that all this buying pressure under here was actually the true move, and we're going to go ahead and create a liquidity grab. Now, liquidity grab is just when we sweep an area and we don't create the next level or next move in continuation with the direction that we're traveling in. To dumb that down, let's say for here, we see that price created a higher high, higher low, higher high, right? And yes, people can look at this as a higher low point, but we did not come up and break the previous higher high, so I don't look at this as a valid higher low point. I would actually consider this just one solid move to the downside, not respecting this area at all, just a liquidity grab. All we did was break above this area just to take out people that entered sells early and then continued on our merry way down. That's what I'm looking at as a liquidity grab. Oops, wrong button. Now, knowing that this is our bias based off the monthly time frame, we can confidently start to go scaling down in the time frames. So we'll go down to the weekly time frame. We already know that there's the two potential scenarios of the sells or liquidity grab buys. As we scale down to the weekly time frame, understanding our higher time frame bias, we can see that using the 50 EMA, which really just is an influence to price action that's already there, but I do like it to help me with my timing of my entries. You can see that price has been nothing but resistance at the 50 EMA and at that monthly level that we're looking at to be a potential lower high at 2,512. So that 2,500 area, very, very key. And also looking at the weekly structure, we see that price created lower low, lower high, lower low, pulled back up to the previous lower high point, and we're treating it as resistance very, very well, respecting the EMA as resistance, respecting that 2,500 level as resistance. That is a very strong confluence for me to continue to look to sells down to the previous range low, which would be 880. And just to be safe, looking at the weekly time frame, we see that the weekly candles did not close under, wrong button here. The weekly candles did not close under roughly the $1,000 mark. So roughly between $1,000 and 880 is where I would be looking to close shorts overall. Now, we can say based off the weekly time frame, sells are definitely something to be interested in. Now, something that just caught my eye as well while we're looking at it is there's a fair value gap right here. And this fair value gap has not been tapped into just yet, but that doesn't mean that we can't come back and touch it in the future, especially if we come down, take out these range lows, and with the higher time frame, look going back to the monthly time frame, these highs here have not been taken out yet, right? We got close, came back down. Price can definitely just come down to this area, create a massive equal lows here, and then rip back up, right? And I'm not trying to predict the future when I'm shooting that far, but based off this price action, we're under the 50 EMA, we're getting a potential shift in structure. It's definitely looking towards that. Now, looking at the daily time frame, and also looking at that previous weekly lower high point here that we came back up and rejected. So I'm just going to mark out right here. Going to the daily time frame, you see that price has given us a nice liquidity grab above this zone right here. Now just looking at this, due to my experience, this is the natural level of resistance and liquidity grab that price used. Actually came out and tapped into this higher time frame weekly lower high point, adding confirmation that this is going to be staying in the downtrend, because if price wanted to go ahead and go into the downtrend coming up to this previous lower high point, we would have found a break and support, then price continued up. That's not what happened. That's not what's happening. Price has given us plenty weeks worth of wicks over here, showing that we're staying under the EMA. We're staying under this previous lower high point. It wants to be held as resistance. Going to the daily time frame again, right? Because time frame confluence, you got to be able to just bounce back and forth through time frames and be able to see what they're telling each other and making sure that they're all aligning with the same bias. I really like to make sure that I have at minimum the monthly, weekly, and daily time frame bias aligned before I even want to jump down to the 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, or 1 minute. Excuse me. If I don't know what the higher time frames are doing, I really have no business going down to the smaller time frames, right? And that's because even if I want to take just a scalp or a 4 hour trade, sorry, I ate a bunch of protein pancakes right before making this video. But before I even hop into the 4 hour or even the 30 minute, even just for a scalp or intraday trade, I need to know what those higher time frame bias is pushing in, so I have the higher bias, or sorry, higher probability to go in favor with the direction the market's already going in. Because if the monthly, weekly, and daily are all going bearish, I have no business going down to the 30 minute or even the 4 hour and be looking for a bullish setup when the 3 higher time frames that I'm prioritizing are telling me it's going down. So I go in the smaller time frames and look for a setup that's going to be going up. Right? To me, that's simple logic. Some people don't think that about that. Just small little things like that make or break your trader. So, looking at the daily time frame, resistance, liquidity grab, there is something I have been a little concerned about, that if price doesn't want to get down to, let's go back to the weekly time frame. Price doesn't want to go down to these levels of roughly 1,000 to 8,800. Sorry, 800. That on the daily time frame here, and I'm not the biggest fan of the structure just because this shoulder would be including the wick, but potential left shoulder, neckline. We see we have the start of the head, liquidity grab, very clean liquidity grab to the upside. You see that price created. See lower low, lower high, lower low, lower high, lower low. When we came back up to make that lower high point, find resistance, price immediately broke through it very aggressively, shooting straight to the neckline, which where we're at now, where we see another liquidity grab, rejected that neckline. Price is now going ahead and breaking under this level of support, which we have consolidated for a couple weeks, right? So I am going to be cautious of this 2075 area. Definitely going to be on my radar. And why is it going to be on my radar? For an inverted head and shoulders pattern. Give me 1 second. Mark out the shoulder. Mark out the head. Now, if price is going to be a proper head and shoulders pattern, inverted head and shoulders pattern, I'm sorry. Let's bring this down. Bear with me 1 second. Now, if price is going to give me an inverted head and shoulders pattern, like we see potentially forming right there, obviously this area is going to be held as support. And looking at this as well, because I am in sells around this area, I've caught sells from here, I've caught sells from here, added in some sells actually during this break of this low today. This market has been very, very clean, but as we get into the smaller time frames, we'll break into that a little more. But looking at this range, while I'm also cautious, that area is also the 50% retracement. So just added confluence for that area to be a potential buy point. Why I got to be cautious of why holding down to 1,000 or roughly the 900, 880 level would be a little too much. So now, looking at the levels that we're breaking now, we're at the daily time frame lows here. And you see that I just marked out the lowest point of the starting point of this range. See, this wick here was the lowest point in the start. Was stretching down here, and prices maintain that point so far over the coming weeks, and you can see that price is breaking this area now, and we're staying under the daily EMA. Looking at the 4-hour now. Now price did end up breaking this nice trend line. Give me 1 second. So you can see here, obviously, the neckline level here. You still see liquidity grab present for on the 4-hour. Here that prices went from trading above the EMA to trading under the EMA. Price is showing signs of a downtrend when we look at these levels here. Price has been in this triangle, if you will, finally breaking out, trading under the EMA. Something I want to point out here on the 4-hour, like if you look at the EMA on the 4-hour, we get a doji rejecting this area here on top of, let's go back, on top of looking at that price action. That doji was breaking the high of this range here, breaking up, taking out all the early sellers, tapping into the EMA with the doji. That's a clean sell-off right there. That was absolutely perfect. I ended up catching some of that yesterday. Scaled in a bit more today here within this. Actually, as soon as this previous 4-hour candle formed, I started getting in my sells. It's been a long day watching this previous 4-hour candle form, but we're still in very good profit here. Planning on holding this trade at minimum to 2,152. If we end up breaking through these areas very nicely, obviously as discussed before, looking at the roughly 1,880 range would be the nice take profit. But you're going to take what the market gives me, not going to try to force anything. I'm just here to react and adapt and learn every single day. That is the best thing I can do as a trader, is just show up with humility and say, I'm not here to predict the markets. I'm just here to react to whatever the markets are showing me, and I'm going to learn every single day. So that's a breakdown of Ethereum, but please don't think just because it's a crypto that's the only way or only thing that you could trade this on, right? Let's go ahead and let's actually look at a forex pair of an opportunity I missed last week, which still kind of kicking myself in the butt for. No need to go ahead and re-break down. It's the same type of analysis that I did on Ethereum, breaking it down, go to the higher time frames, look at the structure. This one's very simple. Looking at the monthly time frame, we can see that price has been respecting these lows here. Can mark out the low of this here, right? So we see the candle closure and then the wick stretching on the monthly time frame. We see that price has this very clean liquidity grab here, but we're coming back up to this trend line. Price is trying to break the trend line, right? So we're coming up to some previous major highs here. Looking at the weekly time frame, price is showing some potential resistance to come back down, right? But we're hanging out at these highs. Looking at the daily time frame, on the daily time frame, you can see that price is starting to get a shift to the downside. Now, I don't want to be calling a head and shoulders too early, because price is still breaking under the head point if it is, but price did break under this trend line, is giving a shift of a lower high point here. So a sell-off to continue down to this potential neckline on the daily time frame is 100% viable, as long as going into next week we can stay under this level of 1.34921. Right, that lower high point would be extremely key for me. Looking at the 4 hour, right, again, the EMA just at a confluence, but breaking the trend line, trading under the EMA. Price came back up, created a lower high point. We actually didn't come back and retest this area. Something to be cautious about. I wouldn't try jumping into something so soon until potentially that gets broken, or you wait for the breakout of these lows. Reason being, price right here, right, yes, we have the equal lows. Yes, we came up, broke above the middle of the equal lows or the middle of the W. We came back down. We seemingly breaking back under, but I don't like how we didn't come back and retest this area. Yes, granted, we retested here, which was the actual touching point of the EMA. The sells could be more valid here, but if price can come back up, retest this area, and then come back down, I'd feel a lot more confident. But let's say the momentum's strong next week, price breaks under this area, doesn't want to even come back up to here. All right, cool. Then just going down with the sells, I'm with it. But a pull back up to here would be a lot more enticing for me. That's just me being safe than sorry, because looks like a great move. Just can't force it. Fair value gap. Let me remember where. It's a weekly fair value gap that we just tapped into. But obviously price is still showing downside potential, so that fair value gap on the weekly time frame can 100% get ran through. Just got to give it time. Let's see, I'll save the breakdowns for another video, or going to a little bit more depth about some things, but that is how I am breaking down my charts, and that's how I'm approaching everything. This is meant to be a basic video. This is an intro video. This isn't supposed to, if you do, amazing, but this isn't supposed to be the video that you watch and then you're like, oh, I mastered this strategy just from that one video. This video is just to give you an idea of how I trade and how I'm breaking down the charts. And then moving forward, I'm going to be breaking down each little step way more in detail each video. Some may be longer than others, maybe a couple minutes, maybe 30 minutes, could be a damn hour. I don't know how much detail that it's going to require, because I'm teaching something that I do naturally for myself. And I haven't taught someone in over probably like 8-9 months. So I'm really excited to step back into that coaching role because of how much confidence I have in myself and my strategy now, and my habits, and just my faith in the Lord, because that's really where this all comes from. to be able to do any of this is all glory to God. I didn't do any of this on my own. I didn't get on this journey on my own. God has put me in the path to do what I'm doing, and I'd be foolish to say that I came up with it on my own. So all glory to Jesus Christ. I hope you found value in this video. And if you did, and you're excited for the coming videos to break down each step way more in detail, and if you have any suggestions of what you want to see in detail, please let me know. This is something for you and me to grow as the teacher and the learner, or mentees, whatever the hell you want to call yourselves. Hope you guys found value. I'll see you guys in the next video.